Hello, everyone. My name is Gustavo Ribeiro, Editor-in-Chief of the Brazilian Report. And over the next 30 minutes, we will explore whether AI is reshaping venture capital for the better or if this may be just another hype circle. This talk will be conducted in English, but you can access simultaneous translation on the Web Summit app for the Portuguese version of this talk. I'm thrilled to be joined by three incredible guests. Fernando Cabral, Managing Partner at Djassi Africa. Fernando is an advocate for building more inclusive innovation ecosystems by backing African and Afro-descendant founders globally. Hello, Fernando.
Hello, how are you?
Aline Oliveira, we know each other from the first Web Summit. Aline is co-founder and CPO of Traive, a platform revolutionizing access to capital for farmers in Brazil and the US, and is also a co-founder of another Gen AI company, Blyoum. Hello, Aline. And Miguel Burger-Calderon, founder and managing partner at BFF, an early-stage VC investing in SaaS, fintech, and infrastructure companies. Hello, Miguel.
Hi, how are you?
Thank you. How are you? So I'm starting with Aline. Aline, from your vantage point as a founder applying AI in fintech, do you think today's AI investments are building lasting value, or do you think it's still too early to tell?
My opinion is that for some types of investors, it is going to deliver the returns that it expect, because normally artificial intelligence is a new stack in the world and needs investment to grow, to scale, of which the adoption is early for some companies, but the trend is there, is very positive. I think that some VCs, however, which they are more used to the traditional SaaS business models or some other companies that the capital structure, the cash flows and the returns are more standard. I think they find some difficulties to understand some of AI, but I think what is bringing now is infrastructure layer companies or mid-layer or application layers. They will all generating results. I was just talking this other day, like with some friends, that they were thinking that the wrappers, they would be the ones that would be least generating returns, and actually people are being surprised by that.
Now, Miguel, how do you tell the difference between a real AI company or a company that uses AI for its solutions, but it's not necessarily bringing anything new to the table? When they are seeking investment, I believe that many people try to brand themselves as an AI company without necessarily being one.
Yeah, no, that's a good question. That's obviously one that we ask ourselves a lot as well. But I would say when you think about diligencing a company, it's not only about specifically, do they know what they're talking about when it comes to AI? It also comes to, are they subject matter experts? And do they really know why they're building the company that they are versus just trying to chase a trend? And I think it also depends from an investor's perspective. So to your point, what you're saying, you know how to look at, from a founder's perspective, how you deal with an investor. I think on average, the thumb rule is it takes 3 to 5 years to become a true subject matter expert in anything that you do. So when I hear investors who, let's say, 10 years ago were mobile investors, 5 years ago were blockchain crypto investors, and now are AI investors, that makes me very questionable. I was like, okay, you're clearly not an expert at what you're looking at. So it goes for both sides. So the way we look at companies, we speak with the founders and we try to get to know them as people. Why are they working on what they're working? Do they have that subject matter expertise? And at the same time, then you also think, are you going to have the perseverance to build this company, not just for the next 1-2 years, is it going to be for the next 5 to 10 years? Because if you're truly a successful company, that's really what you're committing to. So it has a lot to do with who are the founders, who are the people, and then also what are you building, and of course, what's the defensibility around it.
Now, Miguel talked about the difference being who are the founders. Fernando, when we're talking about underrepresented community, whether it's women, people of color, access to capital may be their biggest hurdle in order to thrive when founding their startups. AI brings a different paradigm in which companies need less money in order to fund themselves. Do you think that could bridge the gap between access to capital, or do you think we're going to see the same biases just being replicated over and over?
That's a great question, Gustavo. It depends on the time frame, right? I would say if you look at the next 2-3 years, because investors are so caught up in the AI trap, they will invest in anything that says AI. And then they will see gender, race, and other things, right? So what I want to say is that definitely, for sure, if you look at the next 2-3 years, AI-enabled startups, regardless of who's building those startups, they will have some advantage. So in that perspective, if you look at short-term, 2-3 years, I can say that AI-enabled startups can, the funding gap can be reduced for those AI-enabled startups. But after that, we'll go back to the same thing. The moment when, in 5 years, where all startups are AI-enabled, I say AI-enabled for a reason, because I believe AI is not a vertical, it's an horizontal. Yep. It's an enabler for startups. I don't believe in AI startups. It's AI-enabled startups, right? That's my perspective. So if you look at next 2-3 years, yes, it will reduce the funding gap. But after that, we go to the same thing. When all startups are AI-enabled, they will start looking again at gender, race, and things like that. But definitely, underrepresented founders should leapfrog, should use AI to leapfrog and take advantage right now, because every investor wants AI startup right now.
And in your opinion, what would make a truly inclusive ecosystem?
Sorry, say it again?
In your opinion, what would make a truly inclusive ecosystem?
An inclusive ecosystem is an ecosystem where everyone can be part of it and having the same conditions to play the game. I'm talking about playing leveling the playing field for everyone that wants to be there. That's an inclusive ecosystem where everyone, regardless of their race, gender, age, or so on, they can be part of it, and the playing field is level for them with the same conditions and same advantages.
Now, Aline, do you agree with what Fernando said a few minutes ago, saying that investors just want to invest in anything that says AI? When you say, I have an NI company, do investors say, shut up, take my money?
No, look, I don't know about you guys. If you meet an investor that just say AI wants to invest on me, just point to me, because I'm fundraising. But that being said, no, I think it's the opposite. I think investors, when ChatGPT came along with them, other companies like either trying to do the same or mimicking, because ChatGPT, what the world has scaled was a very powerful induction reasoning system, an NLP, which enabled a lot of things. Investors then did their homework, but I think there are things that vector databases in the companies that emerged, they were expecting that they could solve some of the hard problems, which they don't, just because of the nature. But I don't think today it has been an easy job. I think investors has been way more, I think people, they are learning, understanding, and they are doing the homework. The second thing is, like, from my history, till this day, I have investors, my investors that were invested in Traive coming to me and say, oh, wow, I didn't have an idea what was to invest in an AI company. To the point that, I mean, when they look to the VC worlds and what is happening with the LPs, they look to us and say, guys, you're burning too much money. And we're like, okay, but there's this cost of development. And I think companies like mine, we are just like trying to adapt to some realities of what the investors want in terms of return, and what we need as minimum resources to continue to deliver our AI native vision and products.
Miguel, can you bring your VC perspective?
Yes.
How has you changed your approach to investing in AI companies?
Yeah, I mean, I agree with what you're saying, and then similar to what I was saying before is that you have to come back down to the basics. What is the company actually solving for? What is it doing? What is the value proposition? And is there a real need for this? Like, at the end of the day, you succeed as a company if there's people who are willing to pay for your solution. So you just take it back to the basics. What are you actually looking to solve for? And then if you have AI or not, of course, it can help you become more efficient, but it should be one of many levers as you're looking at the company. So for example, as I was saying before, I believe that it takes a while to become a true subject matter expert. I did 2 companies before in enterprise SaaS. That's what I know. That's where I feel comfortable. So of course, we can't just be blind to how has AI affected the sectors that I know best. So when I speak with companies, and they just tell me like, oh, we're an AI company for X. That makes me nervous. But if they tell me, look, we are a vertical SaaS solution, and we've become much more efficient thanks to AI, we're a small team, we can move much faster because we've built some of their own agent solutions for ourselves. We use some of our solutions internally for ourselves that we then can use for our clients as well. So that makes me excited because that shows me that the founders have a clear purpose and they know why they're building it and not just trying to chase the latest hot topic.
Now, Fernando, we were discussing the fact that AI makes companies be able to scale faster with less money. But Brian Rickworth from Latitude, he was writing on his LinkedIn page, I think it was yesterday or the day before, that the data that they have garnered through the past few months show that even if companies need less money, the companies that get most money are able to grow much faster. So do you think that this AI revolution could change the nature of venture capital, or is it just more of the same?
Well, I think again that AI is a trend. AI has been here forever, right? So if you look back, AI has been here forever. So I think right now is a trend. Every VC will go through it just because they want to be part of it. They don't want to go, they don't want to miss it, right?
Yeah.
But in a few years, again, it will go back to basics. AI will be a normal thing, right? As Miguel was saying, 100% with you. The question will go back to what problem are you solving? What's your value proposition? What makes you unique, right? And what you need to scale. So I believe right now, although AI is a trend, I believe founders need to take advantage of that. Because I believe if you look at markets where we operate, like in Africa as an example, it makes it cheaper, of course, to build startups, right? So that's an opportunity that these founders, especially the early stage ones, can really leverage AI tools to scale fast or to build their companies faster at a lower price, right? So I believe right now, AI, although is a trend, and it will be normalized in 2, 3, 4 years, but right now founders must take advantage of it and use it to scale their companies.
Yeah, go.
Yeah?
You sure? I was just going to jump in. I agree with you're saying, and I strongly disagree with Brian. I don't think that just because you raise more money, you're moving faster.
Yes,
I actually
exactly.
think that's very dangerous.
Agree.
And having done 2 companies myself, having gone through that, and we were very lucky, especially in my second company, we had great seed investors who always reminded us, like, just because you have the money, don't just go and spend it. And we got our Series A preempted, and they were actually the only investors who were very nervous about it. Like, but do you really need that much money? Do you need to raise such big of a Series A? And it was great sparring partners to have and to help us to stay focused and not start spending on things that are not necessary. So I don't think that, especially in today's AI age, just because you have more money, you move faster. I strongly disagree with that. I think that if you're a smart founder, you can move much faster with less capital and do more in that sense. Like, we have a portfolio company here in Brazil that is led by engineers. And what I love about their quarterly reports that they send out, the last KPI they always lead with is with revenue per employee. So they're always very bottom line focused, and they always make sure that they keep improving that. Like, it really is a different way of looking at your net burn multiple.
Can I just add to that? That's a very good point. I completely agree with you. Why we don't talk about the founders that bootstrap? Aline, you bootstrap for a long time, right?
Yeah.
That doesn't mean that Aline is not growing fast because you're growing fast. Again, it depends on the founders. Is a personal choice to fundraise or not. You might want to bootstrap, right?
Well, yeah, but like in my case, for my first company, I fall in that trap, right? Because when I co-founded Traive for the first time, it was 2017, inside MIT lab, that was when Transformer came, And we had this imagination that, which was right, our vision about the AI and the native, but we were wrong in terms of the availability of the data. And we spent up all this money, and I think, to your point, we are wiser. But now, going forward, as founding a second company, which is a Gen AI infrastructure for Graph, I'm doing exactly as I said. I mean, I'm raising as little as possible, bootstrapping, because to your point, like once you have experience and you know this track record, it's just like there are ways. And this other thing which is contradictory, and I think this is where most of VCs are pushing founders, not necessarily to become AI companies in the sense of let's build an AI, but actually you should take this stack, incorporate to your product, because it's make it cheaper, faster, and better. And that's what I think it's more the direction that VCs are pushing the founders, in my opinion.
And I also think to your earlier question, I think it also...
We are.
No, but I think to your earlier question, I think, how do you make it more accessible for everybody?
Yeah.
I think that's a great outcome of it as well. Because now you have founders who maybe are not, in Sao Paulo or Rio, or if you think in the US, or not in New York or Silicon Valley, and they can get access to all of this open source technology. They can go and read it. They can teach themselves how to code.
Yeah.
And if you're a really talented coder, you can get very far with getting a lot of information without necessarily having access, to the closed club per se. And you can build a lot much faster and a lot more efficient. And I think at the end of the day, if you build a product or a company that has lots of buyers and that is gaining a lot of traction, sooner or later, the investors will learn about you, they will find you, and they will go and invest in you. So I think it also helps leveling the field a little bit.
And speaking of that, Fernando, 2023 study found that 25% of founders in Brazil self-declare as being black or pardo, which is the Brazilian term.
Huh? The number is wrong. It can't be 23%, right?
I mean, it includes pardo, which is
the number is wrong, though.
Which is the Brazilian terminology for mixed race.
Yes, yes.
What would be the single biggest piece of advice you would give for a young Afro-descendant founder in Brazil today trying to build a company and trying to raise money right now, some of whom could be in the audience?
Well, that's advice I would give to any founder, right? I would say build something that is solving a problem that is painful enough, that is huge because of scale, and something that brings impact, okay? And for specifically for black founders, that we work with black founders, I would say believe in the journey. It's not easy because the funding gap is real. The playing field is not level. But I would say believe in the journey, make sure that you're building something that is robust from a business standpoint. Make sure that you understand that this is a marathon. It's not a sprint. Understand that you're not going to, this is the conversation we had yesterday, right? You're not going to Series B in 6 or 9 months or a year. Just to understand that there are steps in the process, right? And making sure that, now we're going back to the topic of the panel, just make sure that you leverage AI to help you build quicker and cheaper, I would say.
No,
the number 23%, the number...
You see, he just confirmed what I said. They want cheaper, faster. All right.
Now, the reason for this panel is because AI is getting the lion's shares of VC money right now. So my question to each one of you, we start from Miguel to Aline and then Fernando, is do you still believe that AI is going to eat up the lion's share of VC money, let's say, 3-5 years from now? And if not, can you take a look at your crystal ball and what would be the next hype cycle?
I think it's going to normalize over time. Right now, it's this hot topic and it's front and center. And yes, you have the differentiation between, say, AI native companies, AI enabled companies, companies that existed before, and of course taken advantage of the new technology to help them be more efficient and better. So I think over time, it's just going to trickle in and be a baseline for everything. Same as 10, 15 years ago, you were talking about mobile.
Yeah.
today you don't talk about, oh, are you investing into a mobile company or not? It's like if you're creating a solution, most likely, if you're a consumer company, you're going to have a mobile solution.
But do you think that normalization will happen over how much time?
I think it is one of those moments in our lifetime where it's a big fundamental change. So because of that, I think it might take a little bit longer than other trends. So I would say 5+ years.
What about you, Aline? I mean, you have seen different stages of the AI cycle, right? Like you said, when you founded Traive, it was a different environment. How do you
I mean, in the early days of Traive, saying that you were an AI company, actually, we had to remove from our deck because it wasn't like it was undervalued. But the point, I agree with you, Miguel, but I'm a little bit, I think it's going to normalize in 2 to 3 years, I think. I think the next things will going to come after that, like a quantum computing. I think crypto is where I'm still thinking is going to come back. And it's interesting because, to your point, just like a Duolingo, was reading this other day, my dad called me that the CEO of the Duolingo now said strategically they were a mobile-first company, and now they are shifting everything to become an AI-first company. So this is changing a lot, and I think investors will ultimately, after the infrastructure of artificial intelligence gets normalized, because there are still white gaps there, I think investors will start to look back to the use cases more in a not general way, just specific to AI, let's say that.
What about you, Fernando?
Yeah, I think the trend is good, though. I think this AI trend is good because of all the reasons that we mentioned. And I agree that it will normalize in 2 to 3 years, in my perspective. And in 2 to 3 years, every startup will be an AI-enabled startup. And we want that. That's a good thing. I think the next hype, though, won't be technology. Because what we're going to see from a geopolitical standpoint in the next 2 to 3 years, things will get bad in the next 2 to 3 years if you think about what's going on in the world right now. And I think the next wave will be how we use technology to solve the mess that we're building right now in the world. Because we're creating a huge mess now if you look at the geopolitical stage. So the next thing will be how can we use and leverage technology to solve the mess that we're building right now.
I was talking to Aline at the speaker's lounge, and she was super optimistic. I'm pessimistic, so now I feel like you represent me a little bit.
I'm pragmatic.
That's what every pessimistic person says, right?
Yeah, true.
And another one for the three of you, if you could change one thing about how the VC world is approaching AI today, what would it be? And let's start with Miguel.
Did you say the physical world?
The VC world.
Oh, the VC world.
What should we change about you guys?
Yeah. What would you change?
Good question. I think for me, it's just generally how to approach it. Not VC is an industry. All of our VCs, we tend to get too excited too fast about something, and just run after it. So I would say not just AI in general, but just as new topics come up, not just switch off our brains and throw stupid amount of money at it, and then after the fact, do the circles again and say like, oh, we realize like, yes, we fucked up, we went too fast, we put in too much money, we should learn from it. And then it sort of all cools off, and then I feel like a couple of years later, everybody forgot about it again and does all over the mistakes again. So as I would say, like, let's try to learn from it and not make that mistake again over and over.
How about you, Aline? You said you are fundraising right now.
Yeah, every cycle or year is different in different stages. I say that, look, I think VCs, to your point, Miguel, doing a proper due diligence job, like having the team a subject matter expert in the field that can guide the VC to look to the founders, look to the tech, see the novelty, understanding. Because sometimes it's what I think is hard is like you always have to dumb down some things which are complex to be understood in simple ways, and VCs sometimes they don't have too much attention or patience for things that are in the edge. I think those are the hardest one, which I think VCs are like, I always struggle, and I struggle when you see sell edge, like in the frontier.
What about you, Fernando?
Yeah, I would say to investors, just get out of the AI trap because it gets so annoying.
Yeah.
I'm going to give you a quick example. A couple of months ago, I was talking to an investor. He said, "Fernando, send me a few startups that you're building." I sent a list. He said, "All of them are AI?" I said, "You know what? I'm going to test this guy." He said, "Yeah, all of them are AI." Only one word. And he talked to them without even doing some, it's not investing, it's just talking, right? Yeah. But it's just that thing about all of them are AI. I was like, guy, you need to look at the use case, you need to look at the problem. You need
Papers, publications, or depending on the case, yeah. If you're
so
the web,
just because it's AI, are you bringing those companies to your portfolio and then you build a portfolio of crap, right? And then in 3 years you look back and say, look, I just built a portfolio of crap, what do I do with this? So I would just say for investors, for VCs, just get out of that, AI trap and learn about it, right?
Thank you guys very much. Miguel Calderon, you are founder and managing partner at BFF. Aline Oliveira, co-founder and CPO of Traive, and Fernando Cabral, managing partner at Djassi Africa. Thank you guys very much, and maybe we'll see at Lady Gaga concert on Saturday, or?
You have a ticket?
It's free.
It's free? Oh,
yeah. We're just gonna hang out there.
Sounds good. I won't be here though, but thank you, Gustavo.
And thank you very much.
Thank you.